Hi friends, welcome to Konexio Technical Insights. I am Rahul Randeria. I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns in Nifty, Bank Nifty, as well as on the different asset classes. Now, first of all, let us discuss what you have mentioned in our last video. In our last video, we have mentioned that Nifty and Bank Nifty both were moving in an upward rising channel. They were near an upward resistance trend line. So we might see some sort of profit booking or some sort of cool off for short to medium term, and then we might see rally coming in at the lower levels. So for the first 2 days, Nifty remained under pressure, and then again it started its upward journey, and throughout the week it ended on a positive note. Though since last 2 months we have been mentioning and we have been advocating regarding that the trend is bullish, the strategy should be always buy on dips, because near 5,000, 15,500, we had a target of 18,000 till September or October month, and Nifty is exactly moving in that particular tandem. So definitely the primary trend is still intact. But again, as I said, last week or last 3 days, last week was a monthly expiry. So Wednesday, Thursday, and Friday, Nifty saw a very sharp, significant rally. It was a 90-degree move. Again, on the lower degree charts, it has seen that it has entered into overbought territory. Again, US market has also rallied for the last 2 days and very sharply. So some sort of exhaustion cannot be ruled out. So again, looking at the charts, the we might see some sort of cool off. But again, the strategy would remain that book profits at the higher levels, those who are long. But again, after a correction of 1% of 1 or 1.5% in Nifty and Bank Nifty, again one should go long at the lower levels. Now let us go to the charts and try to figure out what we have observed on the trend. So let us go to the Nifty daily charts. We will go on the Nifty daily charts and we'll see. See, this is the daily chart of the Nifty, and we have been mentioning this downward falling channel since October 2021, and we have been advocating strongly regarding that the markets are into time correction, so it is not going anywhere. It might be very highly volatile months to come from these levels also, or these times also. Now here you can see since October 2021, this was the high. Nifty has not gone anywhere, though it has corrected almost more than 16 to 70% from here to this point. But again, after that, you can see it took so many times. I mean to say, it took more time in fall rather than this rally was in a very short period of time. So this is a very classical example of faster retracement. Fall took more time, but this rise is in the lesser time. So similarly, what we have been mentioning in our last videos, again we are mentioning same thing, that this is a time correction. Markets are not into bearish mode, or Indian markets are not into bad trajectory. So definitely, as we said, that we had a target of 18,000, and we still stick to that. We are expecting Nifty to test the levels of maybe 17,800, and then it might see a breakout till 18,000, and then after that we will take a fresh view that what could be the further trend from those levels. So definitely, as I said, this is Monday, this is Tuesday, this is Wednesday, Thursday, and Friday. This Thursday, Wednesday, and Friday, 3 days we have seen a 90-degree move. So we might see, and again it is coming near the resistance line. You can see this is the resistance line, or this is the cluster area where we might see some sort of profit booking coming in at the higher levels. So Nifty might come down maybe something around these levels from here to here, and then again it might rise from those levels. So definitely, again you can see RSI still it is into a comfort zone. Just it has just entered slightly overbought territory, so we might see some sort of cool off, but that doesn't mean it is a trend reversal. It is just a profit booking at the higher levels, but that profit booking should be used as a buying opportunity. So definitely one should wait for 1.5% correction in Nifty. So ideal level to go long in Nifty would be around 16,800 mark. So now let us discuss what are the supports and resistance level in the Nifty for the next week. The important support in the Nifty for the next week are placed around 17,018 is the first support. Then second support is around 16,893, and third support is around 17,641. Whereas on the upside, the first resistance is around 17,275. Second resistance is around 17,415, and third resistance is around 17,555. So these are the important supports and resistance level in Nifty. Traders should try to follow these levels and trade accordingly in the direction of the primary trend. So definitely one should wait for some sort of maybe correction, maybe 1.5% in Nifty, and then try to enter long at the lower levels. But at this point of time, one should try to book profits and wait for some sizable correction. Bank Nifty also similar kind of pattern has emerged. In fact, Bank Nifty has witnessed a breakout of this downward falling channel since October 2021. So this was the channel which we have been mentioning in our video, and you can clearly see that Bank Nifty has witnessed a breakout. So it is a classical what we call as a channel breakout. Definitely, Bank Nifty has a potential to test the levels of maybe the psychological mark of 40,000 in next maybe couple of weeks or maybe next 1 month. But as I said, last 3 days has been a sharp rally. Again, Bank Nifty has given sort of some sort of indication of exhaustion at the higher levels, because there was a what we call as a hammer kind of formation at the higher levels. Hammer at bottom is bullish, but hammer at top, it indicates that some sort of profit booking cannot be ruled out from these levels. So again, Bank Nifty might correct from these levels, might take support near this resistance trend line, might become support. So ideal level would be maybe around 36,700 to 36,800 on the downside, and that would be the area to go long in Bank Nifty. But as of now, at these levels, we might see some sort of profit booking coming in at the higher levels. So now let us discuss the important supports and resistance level in the Bank Nifty. In Bank Nifty, the first support is placed at 37,028. Then second support is placed at 36,783, and third support is placed at 36,248. Whereas on the upside, the first resistance is placed at 37,777. Second resistance is placed at 37,988, and third resistance is placed at 38,460. Now these are the important supports and resistance level. So as I said, looking at to the charts of Nifty and Bank Nifty, we feel that again on the daily charts, as I said, the last 3 days has been a 90-degree move. So we might see some sort of profit booking coming in at the higher levels. Yes, the primary trend is still intact, but before going long, one should wait for some sort of sizable correction, and that sizable correction, I mean to say, it would be in the sense of maybe 1% or 1.5% in Nifty and Bank Nifty. After this kind of correction, one should go long at lower levels. So now let us come to the third segment of our show, which is option analysis. In option analysis, we'll try to identify, looking at the data of Nifty and Bank Nifty, calls and puts, open interest, then implied volatility, and we'll try to identify, or we'll try to figure out what could be the trend for the next week on the basis of option data. So you will see on the screen the Nifty call data. In Nifty options, the data was seen that there was a rise in the open interest of Nifty out of the money call of 17,200, then 17,300, 17,400, 17,500. Now here you can see there has been a rise in the open interest, there has been rise in volumes, implied volatility is still in comfort zone. There has been a rise in option premium also. So looking at this particular data, we feel that might be because the US markets were positive, so we might see a slightly positive opening, maybe 50-60 points at the higher levels in the Nifty, and then we might see profit booking coming in at the higher levels. So looking at this data, still it is in the comfort zone, but after a gap of opening, we might see smart money might be coming and might be doing or might be taking a call to write the out of the money call. So maybe 17,400, 17,500, or 17,600. This would be the area, or this could be the uh, this would be the out of the money calls where smart money might start writing the calls. So at higher levels, we might see some sort of profit booking coming in around those levels. Now let us see what we have observed in Nifty puts. In Nifty puts, you will see on the screen that action was seen in 17,000 puts, then 17,900 puts, then 17,800 puts, and 17,700 puts. Now here you can see that there has been a rise in the open interest, there has been a rise in the volumes, implied volatility is also rising. This might be because the smart money had a view that market was going to rally sharply, and they have started writing nifty puts. But here only one thing which I feel is that you can see here in 16,700 puts, there has been some sort of shedding in the open interest. Now this is just a small quantity, because it is just 2084 lots, but this is an indication that smart money might have started booking profits, some sort of booking profits in after shorting this 16,700 puts. So either on the downside 16,700 or 16,600 could act as a support area. But looking at this data, I feel that again implied volatility is also rising. It is just near 17.35 in 16,700 puts. So here, if the smart money had started writing in a small quantities, or started booking profits in uh, uh, Nifty puts after shorting them, so we might feel, or we might see some sort of profit booking coming in at the higher levels in Nifty if there is a gap up opening. So there is a slight indication that exhaustion could be seen and profit booking might come at the higher levels in Nifty. So now let us analyze what we have observed in Bank Nifty calls. In Bank Nifty calls, the action was seen in 37,700 calls, 38,000 calls, and 38,500 calls. Now here also you can see there has been rise in open interest. The volumes are also strong. Implied volatility is rising. It is between 16.89 to 16.64 to 16.98. Now here, as we have seen, the last 3 days has been a sharp rally. Because of that, we have seen a sharp rise in the option premium also. So as I said, looking at this particular data, it is still in comfort zone, but only the implied volatility. If there is a gap up opening in Bank Nifty, maybe 100 points, 150 or 200 points on Monday, implied volatility might shoot up. And again, those who are long at the higher level, or those who are long at the lower levels of last couple of days, might come in to book profits at the higher levels. So Nifty or Bank Nifty also seems to be some sort of exhausting at these levels. Auction data still indicates that some sort of upside room is still there, but that could be an exhaustive rally. So now let us try to identify or figure out what we have observed in Bank Nifty puts. In Bank Nifty puts, the action was seen in 37,400 puts, then 37,000 puts, then 36,600 puts. Now here again you can see there has been rise in the open interest in 37,400 puts, 37,000 puts, but there has been shedding in 36,600 puts. Similar kind of pattern was seen in Nifty in 16,700 puts. There was shedding. Here also at 36,600 there has been some sort of shedding. Though the quantity of this is not that much great, it is just maybe 3,239 lots, but still there is an indication of shedding in the open interest, which clearly indicates that smart money might have started booking profits after shorting or after writing Bank Nifty puts of 36,600 maybe a couple of days back. So this is an indication. Now here you can see the implied volatility is shooting up. It is between 18.35 to 19.93. After a gap up opening on Monday, maybe 150 or 200 points, whatever the gap up opening it might be. implied volatility of this particular puts might shoot up, might go into danger zone. So that might bring profit booking coming in Bank Nifty at higher levels. So in short, looking at Nifty Bank Nifty charts, which are oversold, which are overbought, and option data of Nifty and Bank Nifty calls and puts, it is clearly indicating that some sort of shedding has been seen in out of the money puts in Nifty as well as Bank Nifty, which might bring in profit booking at the higher levels if there is a gap of opening on Monday. So definitely the strategy would remain that markets are into overbought territory, though the primary trend is still intact. We still advocate the target of 18,000 in maybe a couple of months. Now from here levels, maybe Monday, Tuesday or Wednesday, we might see some sort of profit booking coming in Nifty and Bank Nifty. So try to book profits at the higher levels. But again, the strategy would remain buy on dips at the lower levels. So friends, now let us come to the final segment of our show, which is a positional call. I've identified one stock. The name of the stock is IRCTC. So let us go to the daily charts of the stock IRCTC, and we'll try to figure out what we have observed on this particular stock, and what could be the returns if somebody invests at these levels. So IRCTC has seen a significant correction in the last 7 to 8 months. After that, it has given some sort of indication that stock has seen some sort of bottoming out process. Now it is poised for an upside rally or a counter rally, whatever we can call it, from these levels, because after a consolidation on Friday, the stock has taken an attempt to to give a bounce or show some resilience at the lower levels. Now here you can see that RSI is into a comfort zone. It is with positive divergence from here, here, and here. When prices were making low tops, RSI was making higher tops. Now here you can see IRCTC had corrected sharply from the levels of almost 1280 till the lows of 557. So more than 50% the stock has corrected. Now you can see here it has formed an inverse head and shoulder. I will try to make a horizontal line so we will have a clear view about this particular inverse head and shoulder. Now you can clearly see this is the left shoulder, this is the head, this is the right shoulder. Now in the right shoulder we have seen a breakout above the trend line. It was supported with very strong volumes. This strong volume has come after a gap of huge 2 months of time period. In this 2 months you can see this volume was lastly made on maybe 31st May. After that, this kind of volume has come after 2 months. So it is a classical example of a reversal. It is a trend reversal from these levels. So swing traders, short-term investors, long-term investors can accumulate the stock in the range of 1637, which was the current market price or closing price of Friday. So investors can accumulate the stock in the range of 637 and on dips to 618 for an upside target of 717 for short to medium term. Short to medium term means it might take next 4 to 6 months for the target of 1717. But definitely those who want to invest for long term, the stock has potential to test these levels of almost 840 for an investment horizon of maybe 12 to 18 months. But yes, those who want to invest for next 4 to 6 months, definitely 717 cannot be ruled out from these levels. So target is intact. From current levels, one can accumulate till 618 for an upside target of 717 in next 4 to 6 months. So thank you very much, friends, for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.